Hi, I'm Grant Williams, and I'm here at the Collective event in Nantucket. It's been a fantastic event so far, and I'm about to sit and talk with the man I have called the Pope of Passive, Mike Green. Passive investing has become such a big topic, and nobody has been better at talking about this in advance and in real time than Mike Green. And as it becomes more important to more people, it felt like a fantastic opportunity to talk to him about it, about what he's doing. And hopefully we'll get to a book he's writing about it, which he'll be publishing in the not too distant future. So here is my conversation with Mike Green. Look, there's so much stuff I want to talk to you about. But we have to start where everyone's going to want me to start, which is passive, right? Yeah. And I'm curious to get your thoughts on this, because I feel from my seat outside it, the first signs of some kind of shift in the narrative. And I don't know if that's me projecting or if that's the truth. So I'd love to get just a sense of where we are and if that is what's happening.
Yeah, no, I think it is definitely, as Ben Hunt likes to say, entering the common knowledge.
Right, okay.
Right? The people are aware that this is now actually a play, and more people are talking openly about it. Where you fall out on it really depends on your perspective, right?
Yeah.
There are people who very much are embracing the manipulation of it, right? This is just a feature of our new markets. This is something we have to address. And do I want to make money or do I want to be right, quote unquote, right?
Yeah.
There's a lot of people who I think are actually very focused on the I want to be right component of it, still fighting the good fight and saying, eventually value will win, eventually markets will return to these. And I think it's really important for people to understand that's always been part of the narrative, right? That's
Sure.
part of been the story is that this is effectively an external forcing or a loading factor that is putting its thumb on the scale and driving this, right? That's been the point that I've made all along, that by the US government effectively blessing passive investing through our retirement systems with the status of a liability protected strategy,
Yeah.
that has biased the entire system, and it has given us the perception that it's the right way to invest. It's the safe way to invest. Most people still view it that way. A growing fraction of people recognize that it is causing the distortions in the market, and it is really a choice of, do you decide to chase it and continue to participate? As Soros famously said, when I see a bubble, I rush in.
Yep.
And that's a completely legitimate approach. There's another approach that says, something along the lines of what I started talking to you about this when I started talking about this in 2016. There was absolutely an element of exploitation around it, and we took advantage of that with a few trades. But the much more important point, like what I spent my time doing, was talking to professional investors, institutional investors, and regulators, trying to make people aware of this. That failed. And this is a genuine sadness on my part, and it's something that I've had to come to terms with.
I know you tried.
Right,
I know you
definitely tried. And it's gotten to the point now where it's, I hate to say it this way, but it's kind of too late, right? Like, we are now at a point where it has become an undeniable feature. People are aware that there's something going on. There remains some debate, right? Is it a bubble? Is it not a bubble? Is this a function of earnings in a particular segment of the market?
Yeah.
There's, there are continued pockets of resistance to that. But the broad academic community, the broad investment community broadly accepts at this point that this is absolutely a factor, and it's really just a question of, is the primary implication that social media is now driving things, as somebody like Cliff Asness might suggest, or is it really an institutional framework, as I would continue to emphasize?
But so let's go back to this common knowledge thing, because this is interesting, right? Because you've been very consistent for the best part of a decade about this, right? And you started out as this fringe guy who was saying this stuff about something that didn't really matter. And the more important it became, the more people wanted to hear from you, because you were the sane voice in the room. But you have been consistent that entire way through. So if we're entering the common knowledge phase, it strikes me, and I could be completely wrong, that phase almost has to be pretty short. Because once common knowledge is around this thing, I would imagine it changes everything around it.
Yeah, I think that there's been a number of components that actually provide some evidence for that, right? And I've written about this on my Substack, right? One of the most transparent ones was when the board member at Palantir posted on Twitter that, we're switching to listing on the NASDAQ so we can get some of those sweet flows from the QQQ, right?
Yep.
Lasted a few minutes. Some of us were able to take a snapshot of it, so it was preserved in perpetuity. Yeah. But, they withdrew the tweet, closed their Twitter account, etc. once they realized that they'd actually said the really nasty part out loud. Right?
Yeah.
Basically, we are manipulating our shares in order to attract flows. I think people broadly at this point are splitting into two camps, and it speaks to the general morality nihilism conflict that we currently have in our society, right? When something systemic like this is happening, and people will always ask me, like, well, what can I do to avoid it? And
Hmm.
the answer is, well, no, that's literally the definition of a systemic risk, right? You are part of something that you
Yeah.
can't avoid. The implications of it are so profound that the only thing we could have done was tried to minimize it actually occurring. Now that it's happening, I would argue that there really is no escape within the system. And so part of what I would argue that we're seeing is we're seeing more and more people effectively deciding to opt out, the bid for gold, for example,
Hmm.
which is an exit voice that makes perfect sense in the context of you recognize that the system is broken, you recognize that there is no desire to fix the system, and ultimately the system is going to be forced to ameliorate the conditions by, as people like to colloquially say, printing money,
Yep.
right? And so I understand the motivation to step outside. The other one is that you continue to fight the good fight, and you basically say, look, this is something that we need to make our way through. We are the only way out at this point is to effectively
Hmm.
through it and preserve some element of what was intended to be there in the first place, which is that markets are ultimately tools for capital allocation. I continue to be in the latter camp. And I continue to believe that, as we were paraphrasing in an earlier discussion today, America will do the right thing after it's exhausted all
Yeah.
other possibilities. There is a genuine change that I'm seeing amongst many members of our society, most recently catalyzed by the Charlie Kirk
Hmm.
assassination, that is leading to people to actually approach things from a more moral framework. That gives me an incredible amount of hope, right? Forget the religiosity, forget the political alignment, et cetera. It's simply a function of trying to regain a degree of moral authority that says this is what we stand for, right?
Yeah.
And I don't think America stands for, objective gambling and speculation and all that sort of stuff. Those are always features of a capitalist system. They always happen at the edges of it. But at the end of the day, capitalism boils down to a really simple observation, right? Which I don't have to come up with a solution. I just have to pay the person who does. And tools like capital markets, stock markets, et cetera, are simply mechanisms for me to provide capital to those individuals who come up with extraordinary ideas, reduce the burden on them to raise those funds directly in the private sector, right? Give them opportunities to compensate employees,
Sure.
obtain additional capital spending, et cetera. The weird part about where we are right now is that I actually think the market impact is becoming less important than actually the societal framework.
Right. I was going to ask you about that.
And that's the part that I continue to try to emphasize with people, because some people tend to respond with the framework of like, well, what's so bad about passive investing driving valuations higher, right? It's good for all of us. But what's actually happening when we talk about PE multiples rising is effectively the effective cost of capital, particularly equity capital, for a subsegment of the U.S. corporate sector has become so impossibly low
Hmm.
that is leading to behaviors that we colloquially describe as loose financial conditions, and we assign it at the blame of the Fed or others.
Yep.
And the reality is that the capital spending boom that we're seeing is largely powered by equity values, right? The debt is being underwritten by equity claims, variable interest entities, and all sorts of other shenanigans are currently underway as people are desperately scrambling to find the cash to compete in a race that increasingly many of these participants acknowledge is actually a rearguard action to protect their existing
Right.
franchise as
Right.
compared to anything that is fantastically about new revenue generation. And so in that sense, like, this is true malinvestment, right? We are providing very cheap capital to allow companies to spend extraordinary amounts of money to protect a franchise that most of us would agree are unwarranted monopolies anyway.
Yep.
And in the process, we're starving other elements of our economy from capital that is desperately needed, right? The ability to finance a home is now in question because of high mortgage rates. The ability to obtain capital for small businesses, or even to obtain employees for many small businesses, is increasingly challenged. And that's creating a condition that we're all experiencing, which is this loss of control to the corporate sector.
Hmm.
And I think that in and of itself is kind of the thing that is penetrating most deeply in people's minds. They feel like they've lost control of their own destiny. That's literally what a monopoly is, right? You've lost the ability to choose who is the provider of your goods and services. And weirdly enough, we are captive and cheerleading it in some ways because it also makes us
I
wealthier
was
as
going to say
individuals in the
the
process.
price is going up, and so everything's fine, right? No one's going to question this stuff while it's going up. But that when you talked about this nihilism, this gambling culture, it's been fascinating to me as someone that grew up in the UK where gambling's been normalized my entire life. And so I was, as a kid, was used to go to my grandma to put a bet on a horse race, right, once or twice a year. And so to see betting get legalized in America and see the inevitable rush to to be able to gamble. Now, we all know that the forbidden fruit, everyone's going to pile in. Eventually, enough people are going to realize this is a sucker's game. I'm not going to make any money here. You're going to end up with the diehard gamblers. But what we've seen in markets is there's enough going on to keep those gamblers into this thing probably far longer than one would have imagined. If you'd have kind of gamed it out looking at other things, you think, well, it'll be a 6-month thing and then they'll realize. But to your point about people understanding how this works and using it to drive the narrative and to drive share prices, what's happening in options markets, what's happening in all this stuff now, feels almost designed to keep people in, right? How does that feed into the passive feedback loop? Are they completely separate, or does the Venn diagram kind of overlap it at all?
No, they're very closely linked. And actually, there's a chart that I typically share in the presentations that I give on the topic of passive that is, I'll just verbally describe it, right? But it highlights that in 1995, 80% of transaction activity was occurring with active managers, right? Professional institutional managers running mutual funds, smaller and hedge funds, separate accounts, et cetera. That number has fallen to 10%, right?
Wow.
And so that devolution of power is quite important. But there's another segment that has actually grown alongside that, which is the speculative retail trader has gone from 10% of the market to around 17% of the market. Now, the vast majority of the growth is actually around facilitation of passive, right? Index arbitrage, the ability to maintain option pricing, et cetera. Those are all the things that make up the largest share of the trading activity. But that growth of the 10% to 17%, now 170% larger than the, quote unquote, professional class, also raises the importance of noise, right? The noise traders. And this is one of the things that I think a lot of people miss, right? Is that when you shift from people who are selecting on the basis of forward projections of discounted cash flow and the calculation of the cost of capital and an attempt to do this in a somewhat honest fashion, even as we fully recognize that there was always an element of the Keynesian beauty contest, right? Who's going to find this most attractive? Who's going to make the most aggressive forecast going forward? And really, it's a recognition that as professional managers, we're not paid for making cash flow forecasts, and we're not paid for making discounted cost of capital calculations. What we are paid for is performance, right? Or what we're chosen for is performance, and a risk-adjusted performance to a certain extent. That means, and there's actually academic papers that have been written on this, that when you move to indexation, when you move to this sort of momentum strategy, where really what you're trying to identify is the impact of flows, the most valuable information on the street actually becomes that flow information. And that relative growth of the noise trader means that they have become far more impactful, right? The easiest way to describe it is the market has become less elastic, meaning that the price changes more for changes in supply and demand. People who took economics will note that that's been inverted, right? We typically refer to it as an elastic good, in which the demand responds to changes in price, or the supply responds to changes in price, in either the short or the long term. When we talk about it in market terms, we're talking about reduced elasticity, meaning the price changes more for small changes in supply and demand. That has raised the incentive for people to seek levered exposure to this. This is actually literally a direct outcome of another chart that I have in there that highlights the component of alpha. If you actually create a curved surface in terms of a return profile through constantly rising valuations, which is a feature of increased passive penetration in the market, that actually means that one of the only ways that you can actually beat the market is by applying leverage.
Right, exactly.
Right. Options are a way of doing that in non-recourse form. It is gambling, quote unquote, but at the same time, there's actually logic behind it. And this is where the system becomes the most dangerous, right? Because it is true that we've shifted the distribution of returns to the right. That means the call options outperform on a consistent basis. People are drawn to more and more levered expressions of that. Zero data expiry options are simply an extraordinarily levered way of making that play. It's, the equivalent of betting on a hard 8 on a craps table, for example, right? You get multiples payout, but it's a very low probability event. If it's just slightly skewed, right? If the dice are just slightly loaded, you can actually have extraordinary returns associated with that. And people are embracing that. And they understand that, right? At the same time, it contributes to a bizarre narrative that we see increasingly amongst the younger generation, which is the sense that the opportunity is running out, the time is very short. If I don't get rich immediately, I'm never going to get rich, right? We were just participating in a discussion in which somebody raised the point that in America, if you don't become rich by 45, you're probably not going to become rich.
Yeah, exactly.
Right?
Yeah.
Well, I think that's actually it's actually somewhat of a counterfactual. If anything, if you have managed to get yourself to a position where you have built a professional network by 45, if you've built expertise in a particular area, that tends to be the time period when the most successful entrepreneurs actually emerge and say, I'm going to take advantage of the human capital that I've built over this time alongside some additional financial capital that allows me to survive the slings and arrows of business formation. And that becomes your point of exploitation. But we've ironically pulled that back to this idea that if you don't hit it early in life, that you're ultimately going to be screwed.
Yeah.
Right. And I think that component, I don't entirely understand why it was. I think part of it is the mythologization of guys like Zuckerberg and others who dropped out of college, right? You know, all these narratives. I see it in my own children, an intense desire for entrepreneurship on a regular basis, in which I'm finding myself weirdly being like, look, I followed that path. You don't have to replicate it. These are mistakes you can make along the way. This is a far better way to deploy that.
But is it entrepreneurship or is it money?
I would argue I would argue it's more speculation than anything else, right? It's an attempt to basically say, this is my idea. I'm going to try to make it work regardless, right? Hard eight the whole way, right?
Yeah.
I see a lot of poorly formed business plans. I see a lot of lack of understanding. This is one of the things that people misunderstand about my criticisms of crypto, for example, right? Like, I'm actually a very enthusiastic proponent of tokenization. I think it provides us with extraordinary stuff. We can talk about that later. But I think the much more important component is I look across the entire tokenization universe and I see just an absolute dearth of understanding of what finance actually is and what we're trying to accomplish with many of these things. And so again, it just feels like there's a little bit of this pretending. And to be totally fair, like, I did that in my 20s as well, right? I hit a momentary level of success early in my career. I managed to spend a ton of money looking really nice and getting dressed and marrying a woman far more beautiful than I was entitled to. And so, like, I can't look at that and be like, oh, that's totally alien. It makes absolutely no sense, right? But
they weren't. That wasn't roll after roll after roll of hard eight, right?
No, there was definitely elements of human capital development and expertise development, et cetera, that allowed me to do that. But with that said, even as I was doing the same thing at 26, 27, 28, like, I didn't know what I didn't know, and that's actually a blessing in some ways.
Sure, but I think you probably would have followed a path. Right, you could see a path stretching out in front of you. That if I go down that path, and it's not, if I make that trade, if I get this one thing right, I'll have enough money. It wasn't that, and that's not to say one's good, one's bad,
right?
But it's just to highlight the shift in mentality, and with that shift in mentality comes a massive shift in behavior.
Yeah, I would argue that way too many businesses are basically being built with the idea that you can exit by sale.
Right,
exactly. That somebody will take me out of this and I don't actually have to learn how to run a business. I don't have to make the hard decisions around hiring or firing or what limited choices I can ultimately make. And unfortunately, I think you just see a lot of that, right? There are incredibly talented young people that I see out there today that would benefit so much from the training programs that you and I experienced, et cetera, right? And employers are cutting back on those components, for a variety of reasons. We're finally, I would argue, starting to see some of this change. Jamie Dimon's announcement that any employee who decides to accept an offer from a private equity firm is effectively fired from JP Morgan, and others following along to that, I think is actually a really important statement at this point. Many of the PE firms are actually starting to recognize that they were engaged in a somewhat fruitless attempt at expansion as well, and you're starting to see some of the implications from that. My guess is this cycle in PE will end up being very much like the cycle we saw in consulting or other industries in prior periods, where a lot of those job offers don't actually materialize 2 to 3 years from now, as firms suddenly are grappling with a very different environment.
Well, I saw a stat today that there's 4,400 McDonald's in America and 4,900 PE firms.
Sounds about right. Yeah.
I mean, something has to give there.
Well, I mean, we know part of what stopped McDonald's growth was the value menu wars. And so, lowering price seems to be the solution to any excess supply. And I think we'll end up seeing that, right? We're seeing that certainly in private credit as BDCs are seeing themselves continuously offered. Private equity firms have taken a downward turn, et cetera. But, we are still very much at a point where I think people are very much of the belief that markets are just up and to the right, and that the path is to take levered exposure to it. Typically, that's the tail end, right? I mean, the reality is I use the expression, why are you reading this now? EWE, right? And that's cribbed and stolen from Ben Hunn, who I've already alluded to. But the simple reality is it's like once most people are starting to talk about, well, passive means markets can only go up. It's almost like I feel like I'm trapped between two camps, right? I've got the value guys on one side who are like screaming, oh, you're just making excuses and this is just another, it's different this time. And that's why you're arguing that things are at a permanently higher plateau. And in many cases, they're dismissing the academic research that uses very precise language and says things like an increase in passive causes a permanent shift in valuations. What the academics actually mean by that is that the inflow from a price insensitive buyer causes prices to rise to a higher level that isn't competed away immediately as we had assumed under a Grossman-Stiglitz type framework.
Yep.
And the irony is that what that means at its next level is that when those passive flows withdraw, you're going to have an anomalous shift downward in valuation that is not competed away again. And so that is ultimately what sets up the stage for a crash. And so this has always been about predicting when that point of flow would reverse itself, and were we going to be at a level of penetration of passive strategies that meant that it was catastrophic in its construction.
Well, this is an interesting thing, and I'm so curious to understand now if we're at this inflection point where it has become a common knowledge game, and we think about the people who've been pulled into this world and the nature of their either sophistication or their understanding of what it actually is they've gotten themselves into, is how that ultimately changes the behavior once the direction reverses, and therefore the outcome, because you've got the people who are going to drive that behavior are now no longer necessarily dominated by sophisticated market participants. So that, one would imagine, would change the behavior of the herd significantly.
I think that's true, and I think we are seeing evidence of that. I also think, like any other period, right, those sophisticated market participants, right, that's code phrase for we know what we're doing, right?
Yeah, we hope to.
The simple reality is that we have spent far too long basically fighting a battle that couldn't be won. And we spent far too little time preparing for the after effects of what we're currently going through. And, I would emphasize that we're seeing this across all spectrums, right? We tend to repeat the sins that we don't remember. The reason we learn history is not because it repeats, but it rhymes. Mm-hmm. Michael Jensen wrote a paper. Michael Jensen was the founder of the Social Science Research Network, SSRN, which anyone who is really interested in kind of understanding the theoretical frameworks behind a lot of this stuff, that's an incredible repository with a growing pool of research that basically says a lot of the theories and stuff that I pontificated on 10 years ago are now being borne out empirically. Right. So it's been very gratifying to watch that occur. But it also means that, we're at that point in which, science progresses one funeral at a time. We're in a market structure that is dominated by people that believe that this is good, and they don't want to hear anything else. Right?
Well, because it has been good, therefore it'll always be good, right?
It has been good, and therefore it'll always be good. And to bring in a blast on the past, Chris Cole at one point famously said, look, it's a good thing if I call a girl after a date.
Right.
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 If I call that same girl who hasn't returned my phone call 270 times in a row, that becomes stalking, and it's a bad thing. Right. And so, there's the expression, what the wise man does at the beginning, the fool does at the end. It was actually a very necessary step to introduce passive investing or index investing as a low-cost alternative to create heterogeneity in the approaches that people used. That was absolutely fantastic. And I actually continue to support that most people should actually have access to this. It's one of the things that I was hoping to preserve. But the simple reality is that if you become a billionaire, like the reality is that you have a responsibility both to yourself and to your society to make thoughtful, active choices about how investments should be deployed. You shouldn't be able to just default into, well, I'm just going to do what everybody else does, not fully appreciating, I understand it can happen, but not fully appreciating how corrosive that is when those who are most capable decide they're just not going to put the effort forward, right? Why? Why should I try doing this? I can simply outsource it to that. And again, I just think that this is becoming a societal feature, right? It's the ultimate millennial participation trophy. How did you become rich? Oh, I showed up.
Yeah.